everybody? Thank you guys for joining. Let's get into this reading, you understand? All right, so this one's coming from Yahoo, and the author of this article is, where is the author? I don't see an author, man. I don't see an author, but we want to big up Yahoo for this article. Oh my God, I almost sneezed. Oh my, I have to find a pillow. I have to find it. Yeah. All right. Let's get back to this, man, because this is uncut. So, bond sell off worst since 1949. Investors' sentiment plummets. Guys, this thing that they call inflation and high interest rates is gonna cause people to take their money out of banks and reinvest it in safe investments. Safer. Because once you put your money in the bank, it doesn't belong to you anymore. They take it, they invest it in something else, and they pay you little to nothing compared to what they make off of our money sitting in their banks, right? So, because of inflation, a lot of folks who are above age from mine, who are used to and comfortable keeping their money in the bank, they're taking their money out and they're putting it into commodities, land, gold, silver, stuff that carries the value. So no matter what, that value is still going to remain. So, global government bond losses are on a course for the worst year since 1949, and investor sentiment has plummeted to the lowest since the financial crisis, BOFA Global Research said in a note on Friday. This year's dramatic bond tumble threatens credit events and a potential liquidation of the world's most crowded trades, including bets on the dollar that have taken the greenback to multiple year highs against other currencies, and bets on U.S. technology stocks, the bank says. Bond funds recorded outflows of $6.9 billion during the week to Wednesday, while $7.8 billion was removed from equity funds, and investors plowed $30.3 billion into cash. Where are all these monies going? If it's being taken out of the banks, where are all these money going? You see what's going on with housing, right? And you can see what's going on with everything else. Where's all this money going? Investor sentiment is the worst it has been since 2008 global financial crash, the note said. And who caused that crash? Banks. U.S. markets appear to set for another volatile day, while street futures fell on Friday as investors fretted over the prospect of an economic downturn and a hit to corporate earnings from the U.S. Federal Reserve's aggressive policy tightening moves to quell inflation, not to mention the crazy sanctions that they have, not just on Russia for the Ukraine, what's going on with Ukraine and Russia right now, but also for the supporting countries around Russia who may be supporting Russia and have ties with IMF. These countries are sanctions too as well. That is causing a trickle effect around the world. It's not just us that are feeling it, but other countries are feeling it too as well. U.S. markets appear to set for another volatile day, while street futures fell on Friday as investors fretted over the prospect of an economic downturn and a hit to corporate earnings from the U.S. Federal Reserve aggressive policy tightening moves to quell inflation. The S&P 500 is down nearly 5% this month and approaching its mid-June bear market lows. And this just starts. Treasury yields, which move inversely to bond prices, were again rising after hitting their highest level since 2011 on Thursday, with the U.S. benchmark 10-year yield recently around 3.76%. The bond crash threatens liquidity of the world's most crowded trades, including long dollar and long US tech, BOFA wrote. BOFA said the investors face more inflation in interest rates and recession shocks. Adding the bond crash meant that a high in credit spreads and a low in stocks had not yet been reached. Aggressive rate hikes from major central banks to contain inflation, even as growth slows, as unnerved world markets and sparked a fresh surge in bond yields this year. Man, I don't know why this one was a difficult one. I don't know. Anyway, but what did we learn from this read, guys? We've read that people are taking their money out of the banks. Where all this money going then? People are taking their money out. As you can see, the billions of dollars that was gone taken. If we can add it up, bond funds recorded outflows of $6.9 billion during the week on Wednesday, right? While 7.8 billion was removed from the equity funds. Equity funds. And investors plowed 30.3 billion into cash. That's a lot of money. That's almost $50 billion in 1 month, in a week, taken out of the bank. By who? By who is taking this money out? And where is this money going? So, high inflation. Only when high inflation times, high inflation season, you see things like this happening. Guys, thank you for tuning in.